Hello, ladies and gentlemen. Welcome back to VCTV. Of course, today we'll be covering a very big topic on its own, but hopefully we'll touch just enough to give you that look into investments and pivots on mobile payment, e-commerce, retail, and consumers in this 1 hour segment. So I think before we start, it's also good to kind of highlight what's going on at the moment. And as we can see, the public health crisis has triggered by COVID-19 has had an impact on almost every aspect of our days across the globe. And as it has put the economy in this uncertain footing, we hope to cover a few things in this session today. We're going to talk about trends. We're going to talk about behaviors, digitization of businesses, and hopefully uncover new startups and what they're doing in the realm today. So again, just to sum up, you are here now. This is VCTV by LATOKEN. It's a platform where we feature up and coming startups and you can kind of see them pitch to their ideas to the VC and investors out there. And as of today and as of now, this session, we have 3 prominent VCs out there. Perhaps you've seen them yourself. We have them here. And before we start, I think it's only just if we give them a quick introduction and have them say a little bit of where they're from and what they do. So I think we'll start on with you, Joel, since you have your mic unmuted. So
yes,
yeah,
my mic
tell us
is
a bit.
unmuted. So.
There we go. Tell us a bit of what you represent and where you're from in the region at the moment.
Well, I should be based in Hong Kong, traveling around Asia, but I'm actually based in my home in Las Vegas. So it's getting late here tonight. But
okay.
I came back in March, and then COVID hit badly, and I would rather stay in a nice house on a golf course than be in a 1-bedroom apartment in Hong Kong. So I'm here. I'm here for the moment, but it's actually been somewhat of a blessing because I've become more deeply involved in the U.S. scene, which is quite different than Asia. So a long hospitality background with restaurants, with delivery. I had a 3-year stint with DirecTV, which was quite interesting. That was one of the first digital platforms in the history of the world. It was a digitized TV. We had 200 channels on our platform back in 1990. So, and we had digital payments back in 1990. So it's nothing new for me. But that was my first introduction. And then I spent a lot of time in East Africa. And some of you may know Safaricom. Safaricom was one of the first mobile payment systems that's over 25 years old with analog phones. So I should say payments with analog phones, which is something that has just caught up in the United States. So I've seen the future 25 years ago.
Nice. We're definitely going to touch on that on the show itself. Thank you for that introduction, Joel. Nitin, how about yourself? Tell us a bit about yourself, the company, and what you represent, which region there.
Hi, thank you, Terence, for having me, and a very bright morning to the viewers of LATOKEN. So I represent and I own the Green Capital Single Family Office. I am the 3rd generation of the family office, and we are deploying our assets and proprietary wealth in differing asset classes, venture capital being one of them, both direct investments and fund investments. And of course, we take other exposure towards public equities, real estate, bonds as well. But here, let's discuss venture capital for what we are talking about. We are about Asia-based. We started in India. We continue to be in the Indian backyard. About 70% of our investments are in India. And I think about 30% investments are spread over US, UK, France, Germany, Dubai, Tokyo, Hong Kong, and Singapore. And today our assets under management for the family office is approximately 300 million USD. And we continue to actively invest in the VC space, both looking at venture direct investments as well as fund-based investments. Thank you.
Great. Thanks for that introduction, Nathan. Later on, we'll get back to you and touch upon the situation surrounding the APAC region itself. Next, we'll move on to Anuj. Hi, Anuj. Welcome. Tell us a bit, Anuj, about yourself.
Thanks, mate. Good to be back. So I'm a serial entrepreneur. I've started 3 startups in the past. Presently, I'm working with some investments with iAngels in Israel. I'm also working with a family fund based out of Buffalo, New York. Along with it, I'm a founder of 2 other startups. One is Yellow Sapphire Technologies, which is working with other startups in fintech, e-commerce, and medtech, helping them reach out to a bigger audience, helping them develop their products. So we're primarily working with them as consultants, as independent advisors to help them grow their business. Along with that, I'm a founder of a medtech company called Atotom as well.
Excellent. Thank you for that quick introduction there, Anuj. Ladies and gentlemen, again, today on our panel, we have 3 very well-versed VCs, angel investors, and also business owners, all grouped in one. And they will be talking about the whole industry, the platform, how companies are behaving, and also touching on the topic today. We'll be looking at mobile payment, e-commerce, retail, and how the consumers and businesses are behaving today and in the coming future. So I think just to kind of touch off on our earlier point itself, now, the impact and the crisis has not been consistent across the sectors that we are talking about and also across geographies. So perhaps with a diverse panel of speakers today, perhaps Nitin, you can take us through from the APAC side of things and tell us, let's talk about that existing trends in both the consumers that you see and also in the startups that you are looking into at the moment. Let's kind of rope them in the whole mobile payment e-commerce sector of things.
Yeah.
Tell us a bit.
So I think over the last 8 or 9 months, there's been a huge cyclical transformation in many of these businesses, and I'll explain why. It was very clear in March or April or even Feb late that businesses that were reaching the consumers in their homes and were digitalized and were logistically not offline would do very well. And that has absolutely panned out and played out very well to the T and to the point. Now, where are we in these? Right now, we are at a cliff. We will slightly unlock and shoot further. And I think that businesses that did very well, and a lot of startups and venture capital investments, which were in delivery, which were in logistics, which were in, I would say, reaching the consumers efficiently in their homes, I think they will now see that the consumer's willingness to move outside and slightly stepping out. And I'm talking about maybe 2 or 3 months down the line, but we tend to be reading out what's going to happen next year. So I think that those businesses are interesting as to how they will cope up with consumers now trying to move out rather than staying in, right? So that's a challenge. At the same time, that's an opportunity for a more parity to come into digitalization versus offline and a bit of swing back towards offline slightly rather than just pure digital businesses. So I think that's another input that we are looking at. And I think hyper local delivery services continue to do well and they come back to pre-COVID levels. And they will probably do much better. And the base traction has been set for a lot of innovation, a lot of entrepreneur, and I'm sure from this year and next year onwards, we'll see a lot of innovation in these 3 segments that we spoke about, and some new businesses which are trying to find their feet up will probably go on to become very large businesses over the next 7-8 years if they start up this year or maybe the next year.
Yeah, I think we can sort of agree with that one as well. Lots of businesses are looking to kind of start up now during the pandemic or even post-pandemic itself. Joel, what do you see in your region? Since you're in the States at the moment, can you tell us a bit on what's happening there, the trends that you see both again and with
the majority of our business are advisors to venture capital and private equity in the broader hospitality space, which are hotels, which is the restaurant sector. We are deeply involved in delivery businesses and payments, but most of it is related to, I would say, broader hospitality, F&B, et cetera. So having done a lot of work in Indonesia, in China, in Malaysia, we've had a lot of interface with Grab, with Gojek, with Meituan, with Ulama. So this kind of, with Alipay, et cetera, this kind of, China pretty much jump-started a lot of this because of the government intention to get rid of the black market, right? Essentially, the Chinese wanted to collect taxes. The Chinese had a huge black market. So, the Chinese government supported digitization and, payment systems where they could make sure that they would get their cut, essentially. The United States is, I'd say, 5 years, maybe more behind where China was, where even Indonesia is. And I think the reason for that is twofold. One, delivery is growing very rapidly in the United States, obviously, but people still live in big homes. So they don't have to go out that much. I mean, it's not like someone in Hong Kong in a 1-bedroom, 500 square foot. I mean, people generally live quite well and they have a lot of space. And Americans are getting lazier and lazier. And obviously delivery is growing and has grown exponentially during the pandemic. What's quite interesting about the United States is people are still using credit cards for everything. So merchants are really being hurt by having to pay 2.5, 2.9%. But the problem is the banks are definitely standing in the way of e-payments. Obviously they don't want to lose their credit card business. So there are a number of fintech companies coming up trying to compete with it. But I think you've got a situation where the banks are doing their best to make sure we don't have a WePay or an Alipay or a GoPay like in Indonesia. So the way I see the US is we're backward, and we're primarily backward because the big conglomerates are trying to stop Amazon's, Facebook's, Google's from getting in the banking system, essentially. So actually Asia is more advanced, I would say, more convenient, better payment systems. And I go back to my experiences in East Africa more than 10 years ago, where people were paying for everything using analog phones, with Safaricom, which was one of the innovators in mobile payments more than 10 years ago.
I think in your part of the world there, since you are talking about regulations and you're looking at the whole ecosystem itself, I mean, do you see a degree of revision to past behavior, or is something of a new trajectory going on over there when it comes to mobile payments and e-commerce itself?
Well, e-commerce is obviously continues to grow rapidly, but as you know, we have one dominant player, Amazon. And the second and third and fourth players are not exactly very competitive. So yes, obviously e-commerce is growing rapidly. Retail, I wouldn't want to be a commercial real estate owner nowadays in the United States. I think it's pretty brutal. I wouldn't want to be trading on the high street anywhere, whether it's London or New York. It's brutal. Any business which is in an urban center is in huge trouble. Restaurants, retail, other retail's closing down everywhere. New York, you can get rents down 50%, 60%. Same in London. So I think this, I don't know how long this pandemic is going to last, but clearly delivery, mobile payments, all of that was trending upwards anyway. And I think what the pandemic did was just probably bring these trends 5 years ahead of where they should be, simply because. The other thing I'd point out is because we're involved with a lot of investment companies, there's way too much money being put into these systems. And most of these systems, whether they're delivery systems or payment systems, software systems, don't make any money. So they're hemorrhaging huge money. And the only reason that there's still money floating in is because interest rates are zero or negative. So LPs are looking for yield. Venture capital funds, private equity funds have too much money. They're throwing it at, there may be 20, 30, 50 different delivery systems, delivery software, POS software, all doing the same thing. So there'll be a huge shakeout down the line, clearly, and a lot of companies will merge, go bankrupt. It's just inevitable, it's just nature.
Right. Thank you for that, Joel. I think that's great insight from you there. Anuj, over to you now. What do you see, Anuj, in terms of really mainstream trends itself, both with the consumers in some of the businesses that you advise and deal with, and also in the new startups that are coming out, perhaps in the last 6 months as compared to what you expect to see in the next 6 months? Can you give us a little bit of an introduction and trend there?
So I think I've been fortunate enough to have a very early entry into the e-commerce market when you're talking about the Asia Pacific region and Southeast Asia. My first startup in e-commerce was all the way back in 2011 when e-commerce was at its peak in India. And coming in from that year to 2020, it's a whole different world right now. There were 30 different companies, everyone trying to get a piece of the market. The market was very fragmented. We are now entering a phase where things are pretty much consolidated in e-commerce when you're talking about a horizontal player. Uh, Something Nitin said that there are leading players in the market right now. So uh, when you're talking about e-commerce in general, I don't see a major shift happening anytime soon. Things have pretty much been established. However, where I do see things changing now is going to be in terms of consumer behavior. Uh, Southeast Asia market has been notoriously late in adopting direct to consumer products. Most D2C companies in India right now still buy their product off of Amazon. That's not D2C. So that's one avenue where I am seeing changes because a lot of these companies that are trying to sell their product directly to consumers have to pay those commissions. They have to pay the middlemen to reach out to them and thereby increasing that product cost comparatively for consumer as well when they realize that all right, if it's a new brand that's coming in, the whole notion or the whole behavior that they had in mind that it's a new company, can I trust it, is now changing to hey, it's a new company, let me try it. So that D2C evolution is where I see things changing. The horizontal e-commerce system is pretty much going to be the same. But that vertical shift where some new companies will involve leading a vertically integrated model is where things are going to change in terms of e-commerce. Likewise, for mobile payments, Reserve Bank of India has been very notorious in terms of making their system very close. They have always tried to protect the consumers, and in doing so, have always stifled innovation. I was part of the Fidelity team in 2011 that launched gift cards for American Express in India, and that was a groundbreaking thing. We have never had a prepaid card in India. Again, very famously, Southeast Asia does not use credit card. We are still very much a cash dependent economy. So that is another avenue where I'm seeing things changing because talking about prepaid instruments, we have had closed instrument which can work in a closed environment. There has been open instrument which could only be deployed by banks. There's been semi-closed one which a lot of non-banking companies can offer. However, there's still been that missing gap where if I am a fintech company, the only solution I can offer is QR based payment. And that's dependent upon the internet. If I don't have good internet connectivity, obviously I can't make that payment. There's always that connection issue that's happening. So this last year, one thing which we saw is the rise of semi-open prepaid instruments. Just last year, Reserve Bank gave their heads up on that. They gave their clearance. So Ola, famously a competitor for Uber, is launching their own prepaid instrument, a prepaid card, which you can use anywhere that's connected to your Ola wallet. And that's groundbreaking for me because when you're talking about a market where internet speed is still not up to the market, still not up to the global standards, having that physical card is really important. That way I can just go onto a merchant and even if I don't have a phone connection, I can just hand over my card. And let's not forget, it's pretty much safer. That chip embedded in it makes sure that you are working through it properly. And since it's not connected to your bank account, there's always that easy adoption. Uh, I'm a part of World Business Angel Forum as well. So as a partner with them, it's my responsibility. We actively work to promote financial inclusivity. And one thing which we have actively studied in terms of fintech adoption or financial product adoption is the trust factor, if you have a huge amount in your bank account, obviously you're not going to be comfortable using that bank account debit card everywhere. But comparatively, if you're using a prepaid instrument where you have just a small amount, you're pretty much more or less going to be open to using that instead of using cash everywhere. So that's another avenue where things are changing right now. The last 6 months were unpredictable. We all remember how Amazon shares started to go down early in the March before they picked up all of a sudden and reached an all-time high. And that shows market is uncertain. We still don't know how things are going to be. But as we are moving on with things, as we are going on to the new normal, things are becoming more and more clear to everyone.
Right, right. Yeah, I think I can echo that as well. And I think as we look at that bigger e-commerce space, when we look at mobile payments, retailers, consumers, are we talking about the overarching theme of going cashless? Let's talk about the behavior and kind of digitization of that. Nitin, perhaps you can comment first. What do you see and what's your thoughts on this?
So I think there are two dichotomous trends, as Joel pointed out. America, US has always been credit card intensive, a plastic economy. Asia, as Anuj pointed out, has always had a preponderance of usage of cash, which I must add is coming down as we speak every year. And the digitalization of payments is increasing every year and it's increasing at a faster pace. Now, even in Asia, if you look at large countries like India, there are dichotomous trends within India. The urban centers, the large cities, which is top 10 cities, are pretty much reflecting trends of any large city in the US where the credit card usage is high, but the cash usage is less. But if you go to the large populous parts of the country and you go to the smaller parts, you'll see that the cash usage is high and the credit card usage is low and debit card usage is picking up, right? So there, you can't really point out a trend even within a country as large as India. Of course, India being a very large example, but if you take small examples like Vietnam, Philippines, Indonesia, they're pretty micronisms of what India is in context, and they're probably there what India was about 7, 8 years back. But if you look at the larger economies and the developed economies of Japan, Hong Kong, Singapore, they're probably further ahead of the US in terms of digitalization and loyalty towards credit cards and their complete abundance towards taxation and clear incomes of digitalization and things like that. So they're very different trends. You can't really paint one picture by a country, but if I would generally talk about Asia versus developed US and Europe, I would say that payment integrations and mobile e-commerce is being heavily taken up by the large banking system, and large banking systems are trying to see, have we been left out in terms of integration of payment structures, integration of payment modules, and they're trying to either take on or acquire or trying to create digital presences across, and that's really picking up speed. That's one particular trend. I see a lot of localization which is happening specifically in terms of wherever countries have large populous traffic areas. I think logistically, hyper-local is something that is a segment which is looking very interesting in terms of investments. In fact, just invested in one of the hyper-local delivery startups, which pretty much replicates what I would say a Dunzo or a Pidge replicates in the Indian market. And of course, Dunzo and a Pidge might also have ambitions to go to the southeast markets of Vietnam, Philippines, and the smaller markets, right? Because hyperlocal is something that logistically is on a good platform. I think what you also have to note is this. I would say there is a fine difference between online brands trying to get offline and offline brands trying to get online. So that keeps on changing. Right, so that mix went more digitalized and online maybe towards the last 7, 8 months. I think that mix might change a little bit. You won't see too much of growth what even an Amazon saw because they probably saw the best part. I see a lot of investments being rotated around right now from I would say the digital economy, the pure digital economy to I would say, the offline economy. So I think payments, localized services, even e-commerce will pick up more in sectors like travel, hospitality, restaurants. I think those segments will show a lot more interest now rather than some of the pure digital sectors.
Right, right. Yeah, I think we can all agree with that as well. Joel, on your side, can you give us specifics on Hong Kong or perhaps even inching into China, and also that compared with the US of A? What's the retailers and consumers looking at, and is digitalization lagging?
Well,
Would you comment?
definitely, I'd say Hong Kong is
Mm,
kind of a backwater for digitalization delivery. It's not that big a market. You know, Hong Kong Chinese like convenience. They can go outside and buy whatever they want, and, you know, eat whatever they want at 2 o'clock in the morning. It's a very convenient focus. So deliveries really never caught on, as, you know, in terms of being anything big. But a good thing about Hong Kong, they have the octopus card. And I
Right.
use the octopus card in Hong Kong. That's my cashless payment, because you basically have this card. You can load up as much money as you want on it.
Yeah.
You can recharge it at 7-Eleven, at, you know, Circle K, at pretty much anywhere. And frankly, it's when I'm in Hong Kong, I use that predominantly unless I'm making a major purchase. So I can go into McDonald's and just about anywhere and use it, you know, simply. And that's I think the payment of choice for basic payments. Someone who goes to Starbucks or whatever, you see younger people, because it's cute and cool to take their iPhone and pay, you know, with their iPhone on the thing, and they think that's
Right.
cool and all that. But most people use octopus card. I would
Right.
still. And in the United States, I'm sorry, we don't have anything like that, which is a shame, because, you know, half of the United States acts like an emerging market. You know, we have, you know, the average American basically doesn't have more than $400 to their name at any one time. You know, they've done a lot of studies. If you had a $400 crisis, you needed $400 for a medical emergency, whatever, would you have it? And I think 40% of the country said they don't. So actually, you could consider part of the United States, maybe 30 or 40% of the United States, to act like an India, parts of India, or to act like parts of rural Vietnam. They really have no money. So actually, an octopus-like card is probably not a bad idea, because even in the United States, I don't know what the exact percentage is, but there's a large percentage of people don't use banks. You know, they go to this, you know, these, I forgot what they call them, but you take your check and you bring it to a store and they give you cash and take 20% out. So I forgot the right term. I forgot the name of the sector. It's a hugely profitable sector, but that's for people who, you know, America also has a maybe 10% of the population or so may be here illegally, right? And so they're using fake Social Security cards. So they'll go to these places that will cash their checks for them, not under the table, but they'll take a huge percentage. And if they need short-term money, the interest rates are crazy. And so that, you know, that type of like pawn shops, basically the modern day pawn shop is still huge in the United States. Huge.
Right.
So
I
the
think
United States
opportunity to grow is there for at least lots of sectors.
Yeah, the United States is in severe need of cashless payments, and you know why it doesn't happen yet. I think the major reason is Americans just love their credit cards. But the other thing I'd say, which I don't know if this is the case in India or Southeast Asia, America has a lot of fraud, and I am very scared to use a debit card like MasterCard or Visa. It's extremely dangerous. I've had to replace cards numerous times because of fraud.
Right.
So if I'm making an online payment, I would generally only use American Express, because I don't have to pay. If there's fraud, I can basically protest it and they don't charge me. But debit cards in the United States, I say, very dangerous in general, including my Amazon account. I've had plenty of problems with fraud on Amazon as one example, which is why I would only pay with an American Express card.
I think then security and authentication, it's different as well in many parts of the world, and some parts do lead that. Moving on, Anuj, how about yourself? When it comes to, like, say, digital wallets or even digitization as a whole, who's lagging and who's leading the charge there?
simple answer to that would be almost everyone.
Hmm.
If anyone who's seen me on the show, I've always been a vocal proponent of fintech because one thing which I've always said is banks have not kept themselves up to date with their security system. Pretty much every ATM in India right now is still running on Windows XP, an operating system which even Microsoft does not support anymore. The whole notion of if it ain't broken, don't fix it has been enshrined in our culture, has been enshrined in that corporate environment. And while I do agree to it, if it ain't broken, don't fix it. But at the same time, you have to make sure that you are updating it, you are upgrading it. And that part is one thing which has been lacking. I've been fortunate enough to work with Paytm. I've known their founder for almost a decade now. I was there when they set up their first operation, when they just started their marketing at Delhi University. I have seen them grow. I've seen them evolve as a product from where they started to what they are now, a $16 billion company. And in that journey, I've had chances to interact with a number of people who have been using Paytm. My co-founder at Yellow Sapphire used to work at Paytm, and I remember when he was working, we were out one time, and we were at a shop, very prominent shop in Delhi. We asked them if they accept Paytm. The cashier says, no, we don't. And my co-founder says, should I ask someone from my team to come and set this up for you? His reply is, no, I'm so sorry. I think I'm going to pass because there are a lot of frauds happening on Paytm. And while the actual amount of fraud that's going on is very minuscule, it's practically negligible based on their security infrastructure, there's still that fear that's there. Like Joel said, people are scared to use digital mode of payment because they are afraid of getting ripped off. That's why they don't use their debit cards. That's why most Indians don't actively apply for credit cards, because they are still scared of that hidden charge. If something happens, what if, even though I don't have any money on this card, someone practically steals my entire credit limit? Do I still have to pay it? And that's where, like I said, a prepaid instrument where you have a very small credit limit, probably just $100 or $200, that you can use without paying any interest, makes it a great value proposition for everyone. The same goes for e-commerce as well. When you're buying something, abandoned cart has always been an issue, because when I'm going online and I'm trying to buy something from a new website, I'm always worried, do I use my credit card on this, or should I go for cash on delivery, which is how most consumers in APAC use e-commerce. And that's one thing which always causes a lot of abandoned cart issues. While although it's steadily been declining over the last decade, it's still significant. So a company that can come in with an innovative solution in both those regions, in fintech and in e-commerce, that can solve the solution in terms of fraud protection on that front, that you can buy a product, have it delivered to you, and then pay it later on, maybe with a small interest or maybe without one. That becomes a value proposition that solves that interest of reaching out to the underserved audience. There's Asia Pacific has over 3 billion population in just that very small region. And of that 3 billion, there are still the number of people who are still using these systems is in hundreds of millions. There's still a huge market that we have not yet tapped, we have not yet explored. And that's just waiting for a company to come in and just reach out to them. So that's one avenue where I'm seeing an opportunity.
Great, great. And speaking of companies and startups and entrepreneurs out there, now those of you watching the show or listening from wherever you are, I do understand that you would also like to hear from the panel, being VCs and investors themselves, on what they are actually looking out for. So perhaps we can go around again, starting from Nitin. When we talk about startups, or when we look at startups and new businesses, those coming out, sprouting, what specifics are you looking for, and how are you preparing them for the next normal?
This is an interesting question, Terence, actually, but I think I'll look at it differently. I'll explain why. But if you look at the category of payments, e-commerce, and logistics, and what we're talking about right now, you have to see why they grew the way they grew, right? So if you look at the base is the mobile phone usage and the explosion of mobile phone, internet, and data, right? And if you look at the trend, if you look at US, the average phone usage for a person, I mean, a US consumer or a consumer in Europe actually does not like his mobile phone too much or love his mobile phone. He doesn't want to spend too much of time on the mobile phone. He rather have his call going to voicemail. And so their usage is about 4 hours, 4.5 hours on an average case basis. The usage in Asia shoots up to about 7 to 8 hours in a day. People are constantly on the phone. People will do everything on the phone. They will update on the phone. They will do their calls on the phone. They love talking on the phone. They will surf internet on the phone. Everything is phone usage, right? And that's the reason why the businesses are doing so well, specifically in these categories. So if a business starts up, it's very important for the business to be integrated and to have a business plan for mobile phone usage, data, internet, and speeds. And that's a very key attribute because that's the delivery mechanism. The delivery mechanism is absolutely critical in the space of payments, in the space of e-commerce, in the space of, I would say, deliveries or hyperlocal. So we look at how people are targeting the usage of phones, which companies are trying to create innovation within mobile phone usage. It's a very different way to look at it because I know what the mechanism of delivery is. I know what the mechanism of payments is. I don't think I need to invent that, but the people who invent the platform take a bigger share of the pie. So we look at that specifically, if that makes sense.
Right. Right. It definitely does make sense. And that's a great point there, Nitin. I mean, you're right in terms of the average screen time increasing and the use of that screen or even mobile device at this point. Joel, off to you. Perhaps you can comment on that as well. How are you looking at businesses when?
Yeah, I think Nitin made some very good points. I'll just say that you know, in the United States, I mean, I don't talk to anyone on the phone. I mean, we text each other. I use WhatsApp. I use, you know, I mean, friends around the world. I might use Facebook Messenger, generally WhatsApp, WeChat, Viber, but actually calling people on the phone is very rare. Video is, I use video much more than I would use, you know, just speaking on the phone. One of the things that might interest you is we've been making investments, direct investments, our company is, in different delivery platforms. And we know that Meituan, Ulama, Gojek, Grab, DoorDash, Postmates, all of those aggregators are unlikely to ever make money delivering. We're pretty sure about that based on, and remember, I'm a former guy who used to run big self-delivery businesses at Pizza Hut. We were involved in Domino's entrance into China. So we know the delivery market very, very well because I used to run 600-700 stores doing it. And we can tell that it's very inefficient when it's dispatched nationally like it is in the United States or China or anywhere else. So they make money because they're part of bigger groups. So they make money on payments, or they make money because they're tied up with travel agencies or things like Yelp and the like. So what we've been doing is we've been investing in what we call food delivery cooperatives. So we actually think that delivery is a public utility, like the electric company or the gas company. So what we're doing is we invested in a platform that has state-of-the-art technology because the technology is cheap. You're not going to reinvent ordering and payments and delivery technology. That technology is there. To spend a lot of money on your own proprietary technology is not worth it. So we've been spending money on the model. So the model that we are very high on is to set up self-delivery platforms or cooperatives in each major city. And the restaurants or the independent merchants own a majority of the platform. So the partner that we have, and whether it's Omaha, Nebraska, Nashville, Tennessee, or whatever, sets it up, invests capital to get it started up, and then sells 70% of the shares to independent merchants. So the independent merchants are part of the ecosystem. Okay, so they're the ones marketing the platform. All the dispatching is done locally. The driver hiring is done locally. Customer service is attended to immediately by local dispatchers. And we've actually been in 2 test markets for, well, I mean, it's not a test market anymore. It's more than 3 years. And those cooperatives are making a lot of money. And they're charging the merchants half the price of DoorDash, Uber Eats, and Postmates. And the reason is basically efficiencies. So we're now that platform we invested in is expanding into 6 other cities in the US this year, and going into Canada, and we're looking at going in the UK. So we think hyper local for delivery is the answer to profitable, low cost delivery, which I think is quite unique, the platform we're working on, which is why we invested in it.
Right, right. Excellent. So from platform providers right up to cooperatives and hyper-localization. Anuj, how about yourself? What are you looking into, and how are you advising some of the new businesses that come?
So one of the key areas that we are very actively looking right now is in terms of social commerce. A lot of companies are very actively using Facebook, Instagram, and other social media platforms to generate sales, and it's doing some great numbers for them. We just had Diwali last Saturday, and based off of some internal research that we conducted, we were seeing some great numbers for some of the companies that were just selling off of these platforms. There are a few companies that are selling homemade sweets, and it's in that era, or in that generation of aesthetic value that we are living in right now, where everything needs to be for the gram. That handmade product shares that extra care, or some extra aesthetic appeal for users to jump in. And like Joel and Nathan said, the hyper-local market is really picking up right now. Amazon is famously entering into that. They have already entered into the grocery sector. They are entering into medicine. So hyper-local, it's really going to grow. We are seeing them invest into retail models as well, which they have been doing prior to this decade. Very recently, has Amazon partnered up with the Aditya Birla Group in India. They are partnering up with the Future Group in India. So they are trying to get into a system, or in US, of course, they've always had Prime now for like 5 years now, but they are now very actively investing in bringing that to India as well, where if I order a product, and if I'm, let's say, in a tier 1 city, I don't have to wait for 1 or 2 days for the product to deliver. It can be delivered within a matter of hours. That way, it becomes more enticing for a tier 1 user. Likewise, setting up supply chain operations in tier 2, tier 3 cities makes them easier to have their product delivered the next day. So it again becomes an area of opportunity for them, where they can reach out to a wider audience, which would usually not accept or rather go for their offering because of that delay. It's always easy to go to a supermarket right now and pick up a product. Barely takes 1 to 2 hours. But if I can do the same thing, if I can get the same product in that same time frame of 2 hours, sitting at my home, ordering off of my phone, I would rather do that. Let's not forget, our generation is becoming lazy. As we are moving more and more into 2100, we are getting lazier by the day. We now prefer to sit on a couch and order everything off of our phone, and we are getting glued to that screen. So let's explore that. Let's go deeper into it. Have more social commerce where, again, you can avoid paying that 20% commission to Amazon. That's one market that's going to grow, because that's always amazing for the sellers. That's amazing for small businesses, and that social commerce segment, and then the hyperlocal segment, where products can be delivered much more quickly to a user than it can be done from a warehouse.
Right, right. That makes perfect sense, actually, Anuj. And to kind of look at things, and for those who are watching and tuning in from wherever you are, again, this is VCTV by LATOKEN. LATOKEN is your #1 digital exchange for liquidity and also listings of new tokens out there. So do check us out. Again, on our panel today and in this discussion, we have well-known VCs and investors ready to assist you and kind of advise you on your next steps forward. So do pitch in your ideas and get in touch with us if you want to hear more from them and from us as well. Now, we are running out of time here as well, and this is a huge topic on its own. When we talk about mobile payment, e-commerce, retail, consumers, they can all be spoken about in depth, in detail. But from your point of view, I would like to end this with a little bit of your top predictions on what's going to happen within these sectors, and also your top picks and what you're looking out for in the next 6 months. So let's sum that up with Nitin. What do you think here, Nitin?
Well, I think what is interesting to note is, and I'll give an acronym on this, is more social commerce, more e-commerce, more availability means the size of your glutes and the size of your buttocks reduces. And I'll explain what this synergy is. You know, world over, we've got into a space of getting consumption thrown at us, and brands are taking advantage of that. But I just want to point out that maybe I think the digital trend has been fast forwarded a bit this year, and you can expect some sort of a shakeout or a reduction of this trend, which will set the pace for a more long-term environment, because I think the balance has shifted a lot more digital to my liking than I think I'd be comfortable with, because you have to understand a lot of the consumer movements and brand movements have moved online, but I think by next year you'll see some parity and balance going back. So entrepreneurs have to have some sort. It's never going to be that this easy, right? This year, if you started a digital business, you did fairly well, but business is not that easy. There will be many troughs, there will be many ups and downs, cyclical trends. Maybe next year we might see that offline does much better than digital business. I don't know. So you have to always work with different paradigms, different shifts, and create worst case scenarios in your business plan and work with different situations. I'll give you an example. You should have a plan. If tomorrow the consumer moves offline, how your business going to survive digitally? Tomorrow you should have a plan. If the consumer does not move offline and he moves more digital, how are you going to take on capacities? So everything is all about having a plan and having different action points and different situational analysis. I don't think anybody envisages the point that companies will earn zero revenue, and some companies didn't and earn zero revenue for 2 months. So they survived that and some didn't. So you should always have a plan in mind for different situations as well. So I think those kind of entrepreneurs will always be better prepared and plan.
Right. Great advice there, Nathan. And thank you for that word of caution as well. How about Joel? What do you think?
It's a big topic, but my final words is the early investors in delivery will make a lot of money, but the fools who get in after the IPO will probably lose a lot of money. So I would say that there's going to be a pretty enormous consolidation in the delivery convenience space over the next couple of years because of the fact the economic model doesn't work at the moment. The other thing I would say, this is more of a US issue or UK issue. There's far too much debt in the system, especially in the United States. Now in Asia, because of, I think Asian governments are probably far more careful about allowing that much debt, and banks are not as crazy as they are in the United States with lending 5-to-1 to EBITDA, this kind of thing. There's, the United States you might say is more sophisticated. I would say it's much more reckless. You know, it's easy to go bankrupt in the United States. And, you know, we have companies that go bankrupt every couple of years, like airlines, and come back, or retail chains and the like. So I would say that, look, delivery is not going away. It's going to continue to grow. E-commerce is obviously going to continue to grow. But if the pandemic ends, obviously, in the sector I know the best, hospitality, hotels, restaurants, people who want to go out, they want to eat out. People will still want to go on dates. Families will want to eat out. So obviously the mix will go back. But I think the younger generation, I think is, I didn't want to say it, but is a lazy generation. And there's a lot of we call them couch potatoes in the US, just pick up their phone and order a hamburger. And really that's something that at my age, I can't fathom. I prefer to actually go out and pick it up, get some fresh air, and save the merchant the delivery cost. So I think that's pretty much what's in store in the United States. A lot more disruption. A lot of companies are going to go bankrupt in the sectors that I'm involved in because of too much debt, but the underlying trends are not going away.
Right, right. Thank you for that, Joel. And we also hope to see a little bit lesser Zoom calls on our end.
Me too. Exactly.
Yeah. Anuj, how about yourself? Final words, predictions, what you're looking out for in the next 6 months, perhaps?
In the next 6 months, I'm looking out for a vaccine. I mean, it can't get here soon enough.
Well, of course. Right.
Yeah.
But yeah, echoing something Joel just said right now, there's gonna be a fundamental shift once that vaccine comes in. I was talking to the team at Make My Trip, and they are expecting something of a rise in what they are calling revenge tourism. People have been locked up for so long that they now just want to go out to get some revenge on that pandemic itself, that defiance that they want to bring in. And it's actually going to happen as well. We have seen it happening. Wuhan, where it all started, once they were able to get rid of it, they saw a huge rise in parties. A lot of people went out to parties. They really wanted to celebrate. They wanted to go out. They wanted to have that vacation. And that's what's going to happen in these countries as well. United States and India have been the two worst affected countries when it comes to COVID, when it comes to the COVID pandemic. So once things start to get better, I'm gonna see a rise on that front. I'm gonna see a rise in that fundamental consumer behavior where they see retail differently than they used to. The notion of should I trust that brand has diminished, and I'm hoping it stays that way, along with more acceptance towards trying out new things. The initial positive vibe that everyone had back in March, that we are all in this together. And while we still are, that has kind of waned on. It's been almost 7 months since the first lockdown started. There's still that worry, there's still that uncertainty in a lot of people's life. So that anxiety is taking over that positivity. So as it's gonna end, as we're gonna reach that final stretch where the vaccine that's now showing 90% or 95% effectivity is gonna come out, it's gonna go out to the most vulnerable. People are actively gonna take that risk to go out. Those younger people who are not really at a very high risk are gonna be more open to traveling once their parents gets vaccinated. So that fundamental behavior in the next 6 months is something to look out for. The second quarter of 2021 is where I'm expecting to see things pick up. Many economists thought that it's probably going to be a U-shaped curve or a V-shaped curve. It's probably not going to be that. It'll be foolish of me, or it'll be premature of me to make that prediction right now without any data. But I'm expecting it's not going to be an exponential rise back to the way things were in 2019. But it's not going to be a slow rise either. It's going to pick up, and it's going to pick up fast. We just have to see how quickly that goes.
Great. I think that's a good way to sum things up. And the word revenge is going to be a good word now. Revenge spending, revenge event. You've heard it here, folks. And for those tuning in, this is VCTV by LATOKEN. Today we had great insights and also a good coverage and overview of the mobile payment e-commerce retail business itself. Again, gentlemen, I thank you
There's
for your
one
time.
last point. One
Yes.
last point. There's also revenge investing, which will come back in.
Yep.
The opportunities that we miss out. So we go back with a revengeful way.
There we go.
I think I'm gonna agree with Nitin on that. We are actually getting ready for our seed round as well. So yeah, I can't wait for revenge investing to start. A lot of investors have held on to that money. It's time to let go of it.
There we go. Now, to all those businesses aspiring to look out for your VCs, lots of revenge spending is going to happen here. So keep tuned, keep abreast, come to us and ask us, of course. Again, gentlemen, thank you for your time and insights on the topic today. It's been great. Do come back and again, have a great day ahead. Thank you.
Thank you, everyone. Thank you, Terence.
Nice to meet you.